Today we're looking at the UK CPI number because it's come in softer than expected. What's the reaction in pound sterling? And then we're going to look at today for the Trading Takeout why it's easy to actually follow a trend following strategy and probably why you should just focus on that. So in front of us, we've got the UK CPI data, which, as you can see, has come in a little bit softer than what the market has expected. So if we look at the core CPI, which matters heavily for the consumer, naturally, 5.1% versus expectations of 5.2%. And the headline number was 4% with expectations of 4.2%. Now, interestingly, cable has behaved in a bit of a, not necessarily a bizarre way, but in a way that one might not expect straight away from a considerable deterioration in print. And I'm just going to change some of the moving averages around just to show you what I mean. And then if we change this one to daily as well. And so what we're looking at here is the 200 daily moving average in blue, okay? 200 daily moving average in blue, and then 100 daily moving average in yellow. Now, what I would be looking at here is, okay, so we've had a really, really soft print. Why are we only down that much? We're only down about, 60 ticks, say. So 60 pips from the where we started before the news. Why are we only down that much? And in my view, I think it's really dependent on this second number. So if we go to the previous number, so UK core CPI, 5.1 actual, but the previous was 5.1 as well. So there's basically no change month on month. The previous CPI as well, on the headline, was 4%, the same as what the number this month was. So there's no disinflationary effect there. It's basically just completely neutral. Now, for the Bank of England to want to reprice cuts into the market considerably, you'd want to start seeing, 3.9%. You'd want to start seeing below this previous. And so what I think might occur now is when we come to look at cable, what we might start seeing is a slow realization of this and the market drifts back higher. The only big sticking point, however, is that the dollar is doing so strongly at the moment. The dollar really is having a standout time. If we look at it versus the euro, we can see that as well. The euro's collapsed considerably, and we're trading at relatively fresh lows. Okay, we were trading at lows that we hadn't seen since November last year. And so where might there be supports here? And I think, if we can look at the moving averages there, and we're going to get onto trend following in the Trading Takeout today. But if we look at the moving average and the differences between the moving averages here and the moving averages on cable, in cable, we're still above the 100 daily moving average and just slightly below the 200 daily. On euro, we're below both. Okay, and it looks like the 200 is actually going to want to cross the 100 pretty soon. So, in my view, there is a bearish bias then on the euro, and we can start looking at really lower levels. So we can start looking at levels like 1.05, for example. This is the trajectory that I sort of see, and if we're going to draw something crudely, what it might look like. It'll probably look like that, a slow grind. And it's going to be a face-off between who twitches first. So who cuts first, the ECB or the Fed? If the ECB cuts first, you can probably see the euro get to there very, very quickly. I don't think the Fed are going to anytime soon, since their inflation print was slightly hotter than expected. And this is why we're actually seeing this deterioration as well. And so I think, yes, we need to really be paying attention to the euro here, because things could get quite messy quite quickly. It's not so much an issue for the UK in terms of FX trading here, purely because this inflation print is at parity with the previous. We're not seeing disinflation and we're not seeing inflation. However, with the Eurozone, it's a different story. I think we're going to start seeing rampant disinflation very, very soon, with a chance to move into deflation. The reasons for that is because the domestic demand situation in Europe is completely battered. We're seeing really bad prints on prints, consecutive prints in Germany, just coming out so poorly. And so these are the things that we have to be really, really paying attention to now when we're coming to a change in the interest rate monetary policy cycle. We're starting to see cuts enter the market rather than hikes or patience. And so this is now when you start seeing reversions of broad moves. You start seeing reversions of moves like this, for example, on sterling, or the same on the euro. So really, really pay attention now to what central banks are doing and how they might be changing tact. I was reading a paper yesterday and it was about trend following and how better it is as a strategy over all others, but also how simple it can be. Now, some of the key points in it for today's Trading Takeout are exactly this. So trading more often has no advantage over trading just once a month, okay? Simple rules have an equal advantage to more complicated rules. And what that might mean is that simply by following, a trend of, is the market above the 200 daily moving average or is it below it? That can work just as well as moving average crossovers and things like that. Complicated stop loss moves have zero value, and this is all from this paper from 2012, which is quite startling, to be honest. And the last one, and the most, I think, important one, was that the amount that you risk is what matters over time. The amount that you risk is the most psychological effect. And so if you're able to manage your position sizing, you're going pretty much halfway to having a good mindset towards trading. You don't need all the fancy bits. You just need to feel comfortable in the market and to feel safe that you're doing the right thing. So really think about what you're doing. Really think about, okay, how can I simplify what I'm doing? How can I extend my time frame so I'm ignoring the whipsaws and the daily noise? And really, really just focus on, okay, how can I get from here to here at the end of the month? Because I think by doing that, you're really going to exploit the longer term trends and you're going to feel more at peace.